Hello, this is Jeff from System Trader Success. What we're going to look at is potential annual salary as described in the article here above. If you're watching this on YouTube or some other location, there is an article associated with this. You can see that at systemtradersuccess.com. So basically what we're going to have here is simply the TradeStation standard analysis techniques, pivot high and pivot low, with a period of 21 for the inputs on both the pivot high and pivot low. And this is generating these dots. Blue dots are going to be swing lows and red dots swing high. So what you see here is the dots generated by those indicators. Now the strategy does not plot these, just to make that clear. The strategy works behind the scenes. You don't see any buy or sell signals on the chart, and you don't see these dots. But of course you can insert these dots by just inserting the TradeStation pivot highs and pivot low with the correct input from the strategy. We're using 21 here. So what's the strategy going to do? At the pivot high, it's going to short. Pivot low, it's going to cover, go long. And at the next pivot high, sell short, go long, and just alternate, capturing these points. It's not going to be perfect. Here it's going to short. Here it won't short again, but there it'll finally cover. So what we're trying to do throughout this whole lifetime, which is a year's period, this is the S&P E-mini on a 5-minute chart, we're going to capture what we're going to call the ideal profit. The ideal profit is going to be capturing all these moves between the swing highs and swing lows. Then what we're going to do is take a percentage of that and calculate our PAS value. The point of all this is to estimate a given market, here again the ES market, how many points can we realistically capture or attempt to capture in a given period, in this case a year. We're always going to use a year for our PAS calculations because it is an annual salary estimation. This of course isn't really what we expect to make, but the PAS calculation gives us a number that we can compare to other markets. The idea being, the more points that we can capture in a market, the higher the potential for profit while we actually trade. So with this ES market on a 5-minute chart, let's go take a look at our symbol. Here it is, it's intraday 5 minutes, and at this filming we're going to test for 1 year, starting on July 1st, going back 1 year. Okay, load the strategy. Let's take a look at the default values. I units is the number of units we're going to trade. We are currently now looking at the futures market, so we're going to be trading a single contract. Look back strength is in regards to how many bars we're going to consider when looking for our swing highs and swing lows. This isn't an optimized number by any means. I just kind of eyeballed this on a chart, and I suggest you do this if you're going to be wanting to change this, and just look for capturing the major swings. You don't have to try to capture every little tiny swing, but try to capture the big swings, and 21 seemed to work out okay. If you remember from the article, I was inspired by an article found in Technical Analysis of Stocks and Commodities. The author recommended 40% as the percentage we're going to take based on the ideal. Now, I found that that's probably a bit optimistic, so you'll notice from the article I broke the percentages down into 3 different categories. And what the software is going to do then is multiply these to get our final percentage. So the first percentage you're going to want to estimate is between each of the swings, from the high-low to the low-high. On each of those swings, roughly how much do you think we can capture? We're going to estimate that 40% of the points between swing lows and swing highs can be captured. The next is active trading percentage. This is the amount of time each day that you're going to spend in front of the computer trading, either manually or through a systematic automated system. So in this case, 30% of our time will be actually trading. The other percentage of the time, the remaining 70%, we're not trading. And then, of course, is the vacation exclusion percentage. The vacation exclusion percentage is going to take into account that 10% of our time when the market's open, we're not going to be trading those days simply because we're going to be on vacation. And from the article, if I remember correctly, this represents about 5 weeks of vacation. Next, we're going to have our slippage and commissions. We have that set to $30 per trade, and that's a round trip figure. So $30 will be deducted for each trade. The next input here is display trades. The information generated by this strategy is actually put into a Excel sheet which is stored on your hard drive. Display trades, if set to true, will actually list the individual trades, simulated trades, that are between each the swing high and swing low. We'll take a look at that in more detail when we actually look at the spreadsheet. If you put this to false, it's just going to give you the summary information and not list all the trades. And of course the final file name input is going to say where are we putting this on your hard drive and what's the file name associated with it. So we have this all configured. This is our default value. Let's let it run on our ES market here and see what we get. You can see across the top here we're going to have our columns. We have our trade number, the date the trade took place, the time the trade took place. We're going to have our direction, the swing low, the swing high, our P&L, and then our accumulated P&L expressed in dollars. And you can see this becomes quite lengthy because we have literally thousands of trades here. So if you're not interested in seeing this information, what you can do, let's close this, and reformat the strategy. See, we had that to true, display the trades. Well, if we're not interested in seeing those, we can just set this to false. So let's regenerate that with false. And this is what the chart looks like now. Now we can expand these out a little bit. And of course, none of these are formatted, and these are all dollar signs. So I'm just going to quickly format these in Excel. This will open up in Excel, or if you use OpenOffice, that will work as well. So here we have our 1,743 trades. The next number is our buy and hold. So what happens if we purchased one contract at the beginning of our test and held it and closed it out at the end of our test, which was a 1-year period? This is the value we would get. Our ideal gross profit is $857,000. Our expenses are $52,000, giving us a net of about $800,000. We're estimating that we're going to capture around 11% of our swings based on our 3 inputs. So this is going to generate a PAS value of around $86,952. So again, this value here doesn't mean this is going to be your annual salary if you become successful at trading ES. Maybe it is, maybe it isn't. The point here is what we want to do is compare this value with other markets that we're interested in trading and find the one or trade the one which has a higher PAS value. Also, we want to compare this value with our buy and hold. Clearly, active trading probably can produce more than the buy and hold. Over a 1-year period, we're generating $3,450 on one ES contract. So we can clearly see here that we have PAS as the leader in terms of buy and hold versus actively trading. Let's compare this now to another popular index market, the mini Dow. All right, let me bring up the other one. I think you can already get an idea which one's better. Okay, here's the ES. So we can see ES has 86,000, roughly 87,000, and YM only has 71 or 72,000. There, made that a little clearer. So what does this tell us? Look at the number of trades. Surprisingly close. Buy and hold is actually a little bit better on YM, but it's about the same. And of course, we can clearly see that on ES we have slightly more profit potential. Let's now compare this to 2 popular future currencies. Okay, I just loaded the Japanese yen. Here that is, we have slightly more trades, less buy and hold, But overall, look what we have. Almost $94,000 in profit. So we're climbing here from YM to ES to the Japanese yen. Let's take a look at the euro. Okay, just brought up the euro. And of course, the buy and hold on the euro, it's negative, which makes sense considering what's all going on in regards to the currency crisis over in Europe with the euro. You can see the buy and hold produced nearly $24,000 in loss. However, actively trading it, giving us a PAS value of $135,000. So this is all these markets trading at the same time frame, 5-minute chart, over the same duration, July of 2011 through July 1st of 2012. And we can see that from left to right, the YM, least profitable, EC, most profitable, with the Japanese yen and S&P E-mini about the same. So what this basically is a tool to help you determine which market has the best profit potential using this method, and clearly the EC comes out on top. For a little something different here, let's take a look at a couple stocks. Alright, the first stock I'm going to load on here is Gentex, but we also want to modify the inputs. Go to our inputs, let's just put 100 shares. Okay, with Gentex we can see that we have a buy and hold, which is negative, and our active trading really isn't much better. As an active trading instrument, out of nearly 500 trades, we're only generating $322. I picked this stock because it was so poor. So, as Gentex as a day trading instrument, it's probably not very good. But let's compare it with Apple. Now, I'm going to load Apple, but first I'm going to change the units to 5. I had 100 here for Gentex. Gentex is about a $20 stock. That's about equivalent to about 5 units of Apple, just to kind of make it fair. So let's see what this generates. That's just a rough estimate. Let's take a look at it. Okay, the thing you notice first off, buy and hold $1,200. For actively trading, we're getting about 462 trades with a PAS of negative 226. So what does this say? What it says is if you're trading only 5 shares, 4 or 5 shares, the equivalent of what we spent on Gentex, it's probably not enough to produce day trading results that would make you happy. In fact, buy and hold is better. So if you're only going to buy a few shares of Apple, what this study indicates is probably a buy and hold approach as opposed to actively trading it. So that's kind of interesting. That's a little different. That's something we didn't see with the futures contracts, which showed active trading outperformed buy and hold. Of course, if you're able to leverage more Apple stock, I'm sure these values would go up. Let's take a quick look at that. Let's just change it to 20. Let me format these values. Okay, so again, buy and hold is outperforming our active trading. I suppose you might reach a point if you continue to increase the shares. This is our strategy, which is available as a download at the bottom of this article. Again, if you're watching this on YouTube or some other location, come to our website and you can have this indicator as a free download. So I think that covers all the basics here. I hope you found this useful. Until next time, take care.